Welcome back to Malaysia Money Matters. It's the 11th of March, 2025. Today we're diving into a sea of Malaysian company news, and then we'll navigate some international and political currents that could impact your investments.
Yeah, there's a lot to unpack, so let's jump right in.
Sounds good. First up, the automotive industry. It seems like it's on the verge of a huge transformation, with the transport ministry really pushing for autonomous vehicles, electric vehicles, and energy-efficient vehicles. They're even testing self-driving cars on Malaysian roads already.
That's right, and this shift, it could have like a massive ripple effect across various sectors. Think about the impact on those traditional car manufacturers, the rise of ride-sharing companies, and even how our cities are designed. It's a whole new world of possibilities, and it's happening right here.
Yeah, it's really exciting to see it all unfold. Now, switching gears a little bit to the world of ETFs, AM Asset Management is closing two of its ETFs, the Trade Plus DWA Malaysia Momentum Tracker and the Trade Plus MSCI Asia X Japan REITs Tracker.
Right, and this is a good reminder for investors to really stay informed about their investments. The reason for the closures: small fund size and high expense ratios. If you happen to be invested in these ETFs, take note their units will be suspended on March 26th with proceeds credited back to your account the very next day.
Right. Always good to stay ahead of the game there. Okay, so now for some good news. Wawasan Dengkil, a construction company known for taking on those really large-scale projects, is going public on the ACE market on March 25th.
And what's particularly interesting about Wawasan Dengkil is their focus on projects exceeding RM 100 million. And they're not just sticking to traditional construction, they're also bidding on projects for solar farm infrastructure, which aligns with Malaysia's push towards renewable energy. Analysts are predicting a potential upside of at least 16% from the IPO price, so this could be a company worth keeping an eye on.
Definitely one to add to the watch list.
Yeah.
On the other side of the coin, Capital A, formerly AirAsia, has announced they're holding back on paying dividends for the next few years.
This decision, coming straight from CEO Tony Fernandes, indicates a strategic shift for the company. They're prioritizing growth in their non-aviation businesses like Teleport ADE BigPay and Santan. Plus, they're aiming to reduce debt accumulated during the pandemic. It's a bold move, and it'll be interesting to see how this plays out for them.
For sure. Speaking of bold moves, Cuckoo International, the company behind those popular water purifiers and appliances, is planning to go public on the main market. They've even secured RHB Investment Bank and Ammon Investment Bank to underwrite their IPO.
Yeah, this is a company many Malaysians know well. They're practically a household name. Cuckoo has outlined ambitious expansion plans, including opening more brand shops, upgrading their IT systems, and even venturing into that Singaporean market. This IPO could be one to watch for sure.
Exciting times for Cuckoo. But not all companies are enjoying smooth sailing. 8 companies, including Dudames Rabina, IDX Multi-Resources, and Mangkubumi, are appealing a hefty RM 92.8 million penalty slapped on them by the MyCC for alleged bid rigging.
This is a significant case because it could really have implications for future tender processes in Malaysia. These companies are arguing that the procurement process they were involved in had over 200 companies participating, so they're saying that ensures fair competition. The outcome of this appeal will be closely watched by many.
Absolutely, a reminder that even in a booming sector like construction, there can be bumps in the road. Now let's talk about West River, an engineering firm specializing in M&E engineering, air conditioning, and intelligent building solutions. They're getting ready for their own IPO on the ACE market.
West River is another company to keep an eye on. They've appointed M&A Securities to underwrite the listing and are aiming to go public sometime in May. The company is focusing on expansion, including plans for a new factory. This could make them a major player in the construction and infrastructure sectors. How they utilize the funds from the IPO will be something to watch closely.
It sounds like it. From IPOs to acquisitions, JF Technology is making a strategic move by acquiring Q3 Probe, a Singaporean probe card manufacturer.
This acquisition, valued at RM 6 million, strengthens JF Technology's position in the semiconductor value chain. And here's what's really interesting. They're looking ahead to that booming electric vehicle market. Probe cards are essential components in EVs, so this acquisition could give them a competitive edge in this rapidly growing sector.
It seems like everyone is trying to position themselves for the future of transportation. Meanwhile, in the world of construction, Kerjaya Prospect has just landed a RM 51.03 million contract for piling and earthworks.
This win is significant for Kerjaya Prospect because it adds to their already impressive RM 4 billion order book. This project is expected to contribute positively to their earnings in 2025 and 2026. Their consistent performance and strong order book make them a company to watch in the construction sector.
It's all about momentum. And speaking of momentum, Khazanah National is making a big splash in the electric vehicle charging space. They're investing in Yinson Greentech's Charge EV.
This investment from Khazanah, the sovereign wealth fund of Malaysia, sends a strong signal about the government's commitment to promoting EV adoption in the country. It's a major boost for the EV ecosystem and could be a catalyst for innovation and growth in this sector. Keep an eye out for companies that could benefit from this push towards EVs.
It's certainly an exciting time for the EV sector in Malaysia. And speaking of exciting developments, LSH Capital has secured a 20-year concession to operate and maintain the iconic Kuala Lumpur Tower.
This is a big deal. They're planning to monetize the tower's potential as a tourism and broadcasting hub, and they have the green light to develop new facilities like retail spaces and event venues. It'll be interesting to see how they transform this landmark.
They certainly have a lot to work with. Now let's shift our focus to MGB, whose subsidiary MGBI has won 2 orders worth RM 88.57 million from Seni Almeria Industrial in Saudi Arabia.
This is a significant win for MGB because it highlights their growing presence in the Saudi construction market. They'll be supplying and installing precast concrete products for a large-scale development project in Jeddah. This win demonstrates their ability to secure international contracts, which is a positive sign for their future growth.
Expanding beyond Malaysia's borders seems to be a trend for some of these companies. Now let's talk about palm oil. Malaysia's palm oil exports saw a dip in February, declining by 16.27% compared to January.
While this decline might seem concerning, it's important to remember that the palm oil market is influenced by many factors, including global demand and production levels. Despite the dip, analysts are still optimistic about palm oil prices in the long term. The rising demand for biodiesel is putting pressure on supply, which could keep prices elevated.
It's a complex market, that's for sure. Now, a bit of a warning bell from Apex Securities. They're predicting lower profitability for Malaysian telcos in 2025.
This prediction is based on a few factors. High network upgrade costs are eating into profits, and average revenue per user ARPU growth has stagnated. Companies like Maxis Celcom DG and Axiata might face some headwinds in the coming year. It's something to consider if you're invested in the telco sector.
Definitely something to keep in mind. And finally, NationGate shares have taken a tumble, plunging to a 17-month low.
This sell-off is tied to concerns about their alleged involvement in a Singaporean fraud case related to NVIDIA chips. NationGate has denied any connection to the case, but the market's sentiment has been impacted. This situation highlights the importance of transparency and strong corporate governance for listed companies. Even a whiff of scandal can really damage a company's reputation and affect its share price.
It certainly can. Well, that wraps up our Malaysian company news. Now let's zoom out and take a look at the bigger picture. What's happening on the international and political front that could impact your investments?
Let's dive into that next. Okay, so first stop China. They're facing increasing deflationary pressure, and that has the potential to send ripples through the global economy, impacting us here in Malaysia as well.
Deflation. That sounds like a good thing, right? Lower prices for everyone?
Well, while lower prices might sound appealing on the surface, it can actually be a sign of a struggling economy. Deflation often means people are holding back on spending because they expect prices to drop even further. This can lead to a vicious cycle of decreased demand, businesses cutting back on production, and even job losses.
I see. So it's not as simple as just cheaper goods. How could China's deflation impact Malaysian investors specifically?
Well, for one, it could impact the demand for commodities that Malaysia exports to China. If their economy slows down, they'll likely buy less, potentially impacting companies here. Investors need to be mindful of this and consider diversifying your portfolios.
Makes sense. What else is happening on the global scene?
Let's shift our focus to Japan, where the 10-year government bond yield has reached its highest point since 2008. This surge is driven by expectations that the Bank of Japan will continue to raise interest rates.
So higher bond yields in Japan. What does that mean for investors elsewhere, especially in Malaysia?
Well, it's all interconnected. Higher yields in Japan could make Japanese bonds more attractive to global investors, potentially pulling investments away from other markets, including Malaysia. This could impact bond yields and investment flows here as well. It's something to keep an eye on.
Okay, I'm starting to see how these global events can have a domino effect. Now, what about oil prices? They seem to be on a downward trend.
Right. There are a couple factors at play here. Concerns about U.S. import tariffs and their potential impact on global economic growth are weighing on oil prices. Additionally, the ongoing trade tensions between the U.S. and China are adding to the uncertainty in the oil market.
So it's like a perfect storm of trade wars and economic anxieties affecting the price of oil. What other international news should we be aware of?
Well, there's been some interesting news regarding AirAsia. It seems Saudi Arabia's Public Investment Fund, also known as PIF, is considering investing a significant amount, US $100 million, to be precise, in the airline.
Wow, that's a pretty big vote of confidence, especially given the challenges airlines have faced in recent years.
Exactly. This potential investment from such a major player signals confidence in AirAsia's growth prospects. If the deal goes through, it could give AirAsia a substantial financial boost and open up new opportunities.
It's almost like a seal of approval from a global powerhouse.
Okay, shifting gears a bit, economists have lowered their growth forecasts for both Singapore and Hong Kong.
Yeah, this downward revision is largely attributed to the escalating trade war between the U.S. and China. As major financial hubs in Asia, both Singapore and Hong Kong are highly susceptible to disruptions in global trade and investment flows.
It's a reminder that even economically powerful nations aren't immune to the effects of global trade tensions. And speaking of trade tensions, it seems like U.S. President Donald Trump's trade policies continue to keep everyone on edge. That's right. With those 25% tariffs on steel and aluminum imports from certain countries now in effect, businesses and investors around the world are navigating a landscape filled with uncertainty.
It's tough to make long-term plans when the rules of the game keep changing, isn't it?
Absolutely. And to make matters even more complex, U.S. inflation remains stubbornly high despite some signs of their economy softening.
High inflation trade wars, a potential recession. It sounds like a recipe for economic turmoil.
Yeah, this persistent inflation could push the Federal Reserve to continue raising interest rates, which could have significant repercussions for global financial markets, including here in Malaysia. It's a delicate balancing act trying to control inflation without stifling economic growth.
It seems like a lot of central banks around the world are facing that same challenge.
Yep.
Is there any other news we should be aware of before we move back to the Malaysian market?
Yes, actually. There's news of a cash crunch affecting several central banks in Asia.
A cash crunch. How does that even happen?
Well, central banks in China, India, and Indonesia are finding themselves in a bit of a tricky situation. In an effort to support their currencies against the strong U.S. dollar, they've been using their foreign currency reserves to buy up their own currencies. This has led to a shortage of cash within their banking systems.
So what does this cash crunch mean for these economies, and could it have any implications for Malaysia?
It's definitely something to monitor. If banks in those countries don't have enough cash, they become less likely to lend money to businesses and consumers. This can slow down investment and spending, ultimately impacting economic growth in the region. While Malaysia isn't directly experiencing this cash crunch, a slowdown in these major economies could indirectly affect us due to reduced trade and investment flows.
It seems like there are a lot of interconnected challenges playing out on the global stage. So we've covered a lot of ground, from China's deflation to a potential cash crunch in Asia. What are your key takeaways from all of this international and political news?
Well, the global landscape is definitely in a state of flux. Uncertainty and volatility are the key themes right now. However, it's important to remember that with volatility comes opportunity.
Yeah, it really is a lot for investors to keep track of. So much is happening both here in Malaysia and globally. It's like trying to solve a puzzle where the pieces keep moving. What advice would you give to investors who might be feeling a bit overwhelmed by all this news?
It's understandable to feel overwhelmed, especially with so much uncertainty in the air, but that's exactly why it's crucial to stay informed and have a solid investment strategy in place.
Okay, so let's do a quick recap of some of the most interesting and impactful news we covered today. What stood out to you as particularly significant?
Well, a few things come to mind. The news about China's deflation is something we need to watch closely. It could have a ripple effect on the global economy, impacting demand for Malaysian exports and potentially slowing down growth in the region.
For sure. Definitely something to keep an eye on. I was also particularly interested by the news about Saudi Arabia's public investment fund potentially investing in AirAsia, that could be a really big deal for the airline, giving them a significant financial boost and a vote of confidence from a major global player.
Yeah, I agree. And on the domestic front, the Transport Ministry's commitment to pushing forward with autonomous vehicles is a bold and exciting move. This could really transform the automotive landscape in Malaysia and create new opportunities in a lot of different sectors.
Yeah, it's great to see Malaysia embracing innovation and looking towards the future. Of course, we can't ignore those ongoing trade tensions between the U.S. and China. Those continue to create uncertainty and volatility in the global markets, which investors need to be aware of.
Yeah, it's a reminder that we live in an interconnected world. What happens in one corner of the globe can really impact us here in Malaysia.
So with all that said, what's the one key takeaway you want our listeners to remember from today's deep dive?
I think it's that the financial landscape is constantly changing, but that doesn't mean you have to feel lost at sea. Arm yourself with knowledge, diversify your investments, and stay focused on your long-term goals. By doing so, you'll be better prepared to navigate the challenges and seize the opportunities that come your way.
Excellent advice. And for all of our listeners out there, if you want to stay ahead of the curve and get those regular insights into the Malaysian financial world, be sure to subscribe to the Malaysia Money Matters podcast. We'll keep you updated on all the latest developments and help you make sense of this ever-changing market landscape. Thanks for joining us today. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.